All right, welcome everyone. June 9th, 2025. Hope you're doing great. Let's dive in. Looks like we've got sort of a sideways moving market today. It's not earth-shattering, nothing gangbusters down. Up 92 on the Dow, S&P up slightly, and the Nasdaq up 83. It looks like it's going to be a slow week. Like, look at earnings. We've got when you think about, these are the major corporations posting for the week. Very few, right? You've got GameStop after the close tomorrow, Oracle after the close on Wednesday, Adobe Thursday, and GitLab on Tuesday afternoon. So just, kind of across the board, different sectors, and I don't really see much activity this week. Last week was huge, as you know, if you are paying attention to what's going on globally. Oh my gosh, like huge run up in all the equity markets. Bond market continues to drop. Dollar continues to falter a bit, and tensions, throughout the world in regarding different situations. So very surprised at the big moves in the equity markets last week. Like, there is this huge divergence between real world events and the stock markets. And it's always been that way. This is nothing new. It just the markets continue to power higher. And if you're in the right sectors, your portfolios are probably doing quite well now. And technology, as we know, really a huge, huge place to have your money invested. Very important to have money in the equity markets in technology. And there's a stock in particular that I really like here, and that is Rambus. RMBS is the ticker. Take a look at the chart with me. We've got it's up 3.3% today. 4-star stock. But look at this chart. Nice breakout pattern. Even though the red is above the green, it's only by a few pennies here. So they're pretty much sitting in line with one another, and you got the stock above all the other averages. But look at that MFI sitting at 55. You got the insiders buying this stock as opposed to selling. Minimal short share, outstanding 3.54%. But the financial health score, check this out. Intrinsic value, look at this price, way below the intrinsic value. We've got total debt well below total equity. We've got operating cash flow to capital expenditures ratio. Operating cash flow significantly higher than the CapEx, and free cash flow significantly higher than total debt. And as you know, free cash flow means companies making money each and every month. And I think Rambus is just poised really nicely for a big breakout here. Revenue growth 41.4%. I mean, it just keeps looking better and better. Look at this current ratio, 10.15. Like, what the heck? What companies do that, to have that type of current ratio? They're doing so many things right. So I just recommend, if you go back, for the previous year, earnings surprises are all to the upside. Nothing earth-shattering in terms of the surprise percentage, but all to the upside. So super positive there. And just check it out. I think it's going to be. I think it's a winning stock. I think it's time to buy it here. It's had some consolidation earlier in the year, around the $40 range to $42. How many months was that? August to October. See that sideways movement, and then a nice movement up to the high 60 range. Did pull back down as well as all the other stocks did, but not as much. If you notice, from the high 60s to the low point at 42.90, not too bad of a pullback there. What, a 40% pullback, whereas a lot of stocks got stuck in the 50 to 100% range pullback. And then it just bounced right back. It just got right back to business. And anyway, I think I'm really liking this stock. I will bring this to your attention. Had some great meetings last week with some of you who are new to our platform, so welcome. And I was explaining, how I had so many questions around this stock rocket thing. And this is the section of the software where I've made the most money with it. And I've noticed that the more frequent showings of companies on this list over a 2-week period, the better the stocks do. So we started actually tracking that. And here's one that we've been tracking for the last 2 weeks. And then we show, when you click on it, it shows the stock rocket streak details. So it shows the day it popped up on the list. It was trading at 206. Today it's trading at 215. And that was actually yesterday's close, or Friday's close, and then today at 223. So making these really nice movements up. And like everything looks really good about the stock. It's just, you have to be someone who is okay with owning a stock in this particular category. But you can see a big breakout pattern here. It will reach, it'll test those previous highs at 249. So that's a 10% move in the short run. But the thing is, you just have to be okay with owning a company that is in the space of, so I'm going down to company information. They sell e-vapor products in China and internationally. So, it just is what it is. If that's your jam, hey, I highly recommend checking the stock out. I think you'll do very well with it. And just wanted to give an overview of how to use that section of our platform, this Stock Rocket section. Yes, you can click on Go to Stock Rockets, and this list will pop up for companies all over the world. I can see some Hong Kong exchange. I see India exchange. We are very much a global platform now with nearly 2,000 users and from all around the world. So we're grateful. Thanks you all for being here. And if you have any questions, I'm happy to answer them on these live streams or go right to the stock form. But before I leave this page, if you're in North America, NVIDIA. So this has been a few times NVIDIA has been showing up on this list. It could make that streaking stock rocket section as well because it's shown up here multiple times. And what a great company, obviously. One of the highest market caps in the world with this stock. Last I looked, it was at 3.3 trillion. Let's take a look now. $3.4 trillion is NVIDIA currently at $142 a share. And sometimes this happens, we have so many new users on our platform that you might get that, what I just got there, that maximum call exceeded. Just hit the refresh button and then the chart will pop right back up. So NVIDIA is really floating around the highs here, the previous highs. I think the previous high was made on January 6th, early this year at 149. Yeah, that looks like the high for the year. And it should retest those highs. I think, in my opinion, we're going to see more and more money flowing in this market. This market is driven by retail investors. Retail investors have learned to buy the dips, sell the rips. And most institutional investors are still shorting stocks. Like they're either sitting in cash or shorting stocks. And I think at some point, some of those money managers are going to be tasked with putting some money to work. I mean, we're already almost halfway through the year. And if the money has been sitting on the sidelines and or shorting companies, it's really important for that manager to make their bonus to start putting some money to work because this market continues to move higher. And, I titled this Your Money Moves. So your money move here is when you have stocks that are profitable, that you are actually, in the black, you've been making money with it. Start doing your best to sell the short-term covered calls. You don't need to go all the way out, like months and months down the road. But, Monday we do these calls, like these live streams. And Friday is expiration, and with companies that are actively traded, they expire every single Friday. So if you own 100 shares of a stock, that allows you to sell one covered call on a stock. So let's say you own 100 shares of NVIDIA and you've already made money with it, you're profitable. So you scroll down and you look at, okay, I'm profitable. The market was up huge last week. It may not be as aggressive this week. So how do you play this? And you can look at selling out of the money calls. Like if you're sitting with NVIDIA at 142, let's say your cost basis is 140 or less, you can consider, any of these contracts would work for you. The further out you go in strike price, perhaps the least likelihood that the stock will be called away this Friday. That's the general thinking around that. Generally speaking, stocks don't perform greater than 10% in 1 week. Like if you get a stock to move 10% in a week, that's a huge, huge thing. So with NVIDIA, 10% move would be roughly $14. So you just add 14 to 142, you get 156. Now, if you look at the contracts of 155, they're only sitting at 8 cents. So you'd only make $8 on that contract. So what you can do is think about, all right, let me scale that back. Let me look at a strike price that's under the 10% move. Maybe you're looking at a 5% move and 58 cents. So you would sell to open STO, sell to open one covered call, making 58 bucks. And if you do that each and every week, there's going to be some weeks these contracts are richer than other weeks. And you can find yourself really adding a nice sum of money to your portfolio just by this covered call strategy. And we're clipping along at about a 1.3 to 1.5% return every single week on portfolios that I help people manage. And when you annualize that, you're looking at a 60% return just on the covered call premiums, let alone the gain in the stock. So if you're someone who's sitting with $1 million or more and you would like a little hand holding in this, I have one opening in my personal coaching program that I would love to connect with you. Let me know if that's something of interest to you, and we can talk about what your goals are and what you've been doing. I'm only interested in working with people who are ready to really rock and roll, ready to put money to work. We know that a confident investor is an investor who is a profitable investor. So really, as long as there's no fear attached to this equity market, we can really help you make quite a bit of money. So just to reach out to me through either the software or through my email, that'd be great. And my email, js@sterlingstockpicker.com, right? So yeah, just check out a couple strategies like that. Really stay in the lane of these technology companies, looking at where to take advantage of dips. And then when you're in a rip situation where a stock is much higher than where you purchased it, heck, you can even look at some in the money calls. Let's say you're really up on this stock. Maybe your cost base is $100 a share, 115 or 120, and you've gotten a 20% return in a short period of time. You're so happy with that. And you're like, hey, I'm good at selling it at $140 a share. And you'd be like, Jaden, well, wait a second. The stock's at $142.61. Why would I take $140 a share? Because of this premium that you're going to get $3.80. So that actually you add that premium to the strike price and you get your total exit price for the stock. But the difference is the premium you receive the moment you sell that call, and the strike price is received on Friday if the stock is higher than your strike price. So that means you'd be called out of the stock. But, like based on these numbers right now, the stock's currently trading at 142.76. If you, instead of selling it at that price, go ahead and do a covered call, sell to open, receive $380 for that one contract to the moment you sell that covered call, and then wait to Friday to see where the stock is at the close. Doesn't matter what happens during the trading week. The stock can be higher, it can be lower, but Friday, where it really matters is at the market close. You have to look at what is the price of the stock. And if it's $140, it will be called out of your portfolio. Okay, or higher. If the stock gets 140 or higher, it can be $140.33, and it's going to be called out of the portfolio, most likely. But that's what to expect. That's how this works. It's in this type of market, it's the best money move you can make because of the volatility in the equity markets. If you're called out of the stock on Friday at 140, you might have an opportunity to buy it back next week even cheaper. So anyway, just wanted to share that strategy with you. I think if you're interested, check it out. And like I say, kind of a slow week on earnings, not much to report here. Based on last week's huge moves, it was just insane what happened in the equity markets last week. I think we're going to have a slow trading week this week. Since we've been going live here, we've got the NASDAQ up a bit, the Dow up a bit, just very sideways movement in this equity market. So I hope this is helpful to you. Hey, meet me in the stock forum. If you have questions, just come over, click stock forum, ask it here. I'll be happy to answer. And if you post anything, it will show under recent posts. So you can post about companies. This gentleman here posted about Catalyst Pharmaceuticals, asking anyone recommend this stock or bought it. I am not at all familiar with this stock, so I can't help you there. But if someone is, just please chime in. And so what you would do to respond to that is you would click on the name of the company and you would scroll down to the bottom. Right in this section here, and you would simply hit reply and you would type out your comment to help this guy out. So hope this helps.